Hi everyone. So today I'm with Dom and we are going to be covering a new company called BiliBili. It's a Chinese company and Dom's gonna do an analysis, tell us what the company does.
Thanks, Matt. Let me share my screen.
All right.
Let me
Watching.
know if you can see this.
Just could you zoom in, please?
Oh, yeah.
All right,
All
perfect.
right, there we go.
Thank you.
Doing now. Okay, so Bilibili is basically like a company in China, Taiwan slash Hong Kong, and their bread and butter is kind of like being the Chinese version of TikTok slash YouTube. So this article that I'm showing right now is a couple years older. It's from 2023, but it kind of gives like a basic understanding of what the company is about. And essentially, what they want to do is be like a hub for like young Chinese to get like advertising, do short form content like videos, a little bit of streaming. Basically, it's just like I said before, their version of TikTok. And so lots of companies are interested for advertising purposes and things like that because they're looking for that young demographic for whatever their brand is. It's a great way to kind of reach out to them. They aren't the biggest in the Chinese space for this type of content. There are a couple other companies that are still bigger than them. There was a section on here I thought that talked about that. Oh, here we go. Um, Other companies are Yoku, Aiki, QQ Video. I probably butchered some of those names. I'm sorry. But these are larger, similar companies that do the same thing. But Bilibili is on the rise. And again, this is a few years old at this point. But just steady growth in terms of active users every quarter. Um, then they did provide a actual like quarterly update from their website. It doesn't give too much information per se that we can really delve into. Just kind of gives a little more about like the background and like their past operations. But I kind of let Matt take over and let him do the numbers portion.
Okay.
Basically, just yeah,
All right. Thank you, Dom. I appreciate it.
no problem.
All right. So let me go ahead and I'm going to share my screen with everyone and Dom, and we're going to take a look on what they do. Dom, you could see me? There, you could see the screen.
Yes.
All right, perfect. So you could see here that Billy's Q2 earnings came out August 21st, so of this year, and they did pretty well overall. They increased revenue about 20% to 102 billion. I'm not gonna, that's renminbi, so I'm not gonna cover that, but 102 billion in American dollars. Their mobile games revenue grew 60%. Their advertising revenue grew 20%, and their value-added services grew 11% year over year. This is all year over year. They did have a net profit of 30.5 million, reversing a net loss from the same period. So they are growing significantly in every metric that you could see. These are all obviously their big growth revenue generators, mobile games, advertising, value added services, like live broadcasting to be specific. So, and like Dom was saying in the chart, same thing, the user growth grew 7% year over year. The article he was covering is a little bit older, but it did a perfect job of explaining what they do, and they are still growing. There's a lot more daily active users, monthly active users. That's a metric these social media companies go by, which is great. And this, as a reason, because of these financial results, stock did increase in value a little bit. So, if we check the next thing, which is free cash flow, this is the past, obviously, 2021, negative 6.3 billion. And now it's about 5.1 billion. So they did grow significantly from there. The problem is going to be this. We're going to see that the future growth here, which is free cash flow, right at 5.1 billion here, and the next 3 years to the end of 2027, it's not growing at all. Actually, it's going to dip a little bit to 5.12 billion. So that right there, I don't love that because usually when Dom and I cover companies, we try to look for doubles and triples in free cash flow growth. Here, it's just stagnant or it's slightly going down. So it looks like it may have hit its peak almost. And you could tell by the other competition Dom was talking about too. There is a lot of other competition from the bigger companies. So the financial health is actually quite good. The debt's a lot lower, so they've been paying it off. The cash has risen a lot, and the equity's good. This is exactly what you want to see too. So really, there are no complaints on this end for at the very least. Now, if we check my DCF on this, my DCF is going to say it's undervalued by 3%, which is excellent for especially a big company like this. If we check historical growth, that was Wall Street forecast, and historical growth is generally more accurate. It's undervalued by 45%. So before Tipranks would have agreed with me on this, so let me just cancel out these ads. But Tipranks would have agreed with me on this. It's still a strong buy, 8 buys, 2 holds, but it has had quite a rally since their great earnings in August 21st. So it's about 2 weeks ago, 3 weeks ago at the time of recording this video. And before I did take a look, it was like 25% upside, and they've rallied like 11% since their lows. So there's only 8% upside. Right now, it's not a good buy, but I would definitely keep it on your watch list just to see for the future, because I do think this has pretty decent potential for something big, but you still have to be careful about the free cash flow growth. That's the only thing I would recommend for people to look out for. All right, Dom, is there anything you want to add? Or
No, I think you did a pretty good job summarizing it. I think
okay,
it's a great thing to keep on the watch list, especially because you don't know if it keeps going up. But as we saw, the free cash flow is not very good. And so
yeah,
there's a big chance that there could be a sell off. So, like we
yeah,
said, watch is always a good one for this one.
yeah, exactly. All right, thank you, Dom. Appreciate it.
Thanks for having me.